会場の皆様お待たせいたしました。 Thank you all for your patience。 それではプレゼンテーションに進みたいと思います。タイトルは機関投資家による Web3 の採用、金融、セキュリティ規制をお届けいたします。 Our first presentation of the day is Institutional Adoption of Web3 through Finance, Security and Regulation。 それでは早速こちらの方々にご登場いただきましょう。 Okay, let's welcome our guest panelists for today. First, representing Mitsubishi UFJ Innovation Partners, Mr. Nobutake Suzuki. Next, representing OSL Group, Mr. Eugene Cheung. And representing Fireblocks, Mr. Stephen Richardson. The session will be moderated by Ms. Angelina Kwan of Stratford Finance. Okay, everyone, please come on up to the stage. それでは皆様どうぞご登壇ください。拍手でお迎えください。 Let's greet them with a big round of applause.
Good morning, ladies and gentlemen. I have a treat today. I have an amazing panel. I have an amazing panel of very, very knowledgeable professionals today with Suzuki-san, who is the he's the head of the Innovation Partners for MUFG, which is one of the largest banks in Japan. I've got Eugene Cheung, who is the Chief Commercial Officer of OSL Group, the very first virtual asset company in Hong Kong to get the license in Hong Kong. So they are the OG in virtual asset trading platforms. And last but not least, Stephen Richardson, who's the Chief Strategy Officer for Fireblocks, which is one of the preeminent custody, if not the most preeminent custodian that I know. So we've got a great panel to talk about today in terms of the institutional adoption of Web3 through finance. And basically, we're seeing so many changes, and we were discussing just before. Could you maybe start with a little bit about what's happening in Japan and just sort of outlining what you're seeing in terms of institutional adoption of Web3 and virtual assets?
Okay, thank you, Kwan. So let me talk about the current Japanese status of maybe adoption of Web3. So I think the big news is that maybe recently JPYC, which is a Japanese startup, announced that they are going to issue the first maybe stable coin in Japan, which is Japanese yen based, and under maybe Japanese amended payment service act. So this is quite a milestone for maybe Japanese Web3 industry. And but I can say that maybe last maybe 6-7 years, not only startups like a JPYC, but also banks have been exploring about maybe the opportunities in the Web3 space by, let's say, launching initiatives like in the security token space. So in case of MUFG actually launched a program, which is a security token platform, and that was established in 2018 and by our Trust Bank unit. So basically, since then, this program has originated, security token backed by various real estate projects. So even banks like MUFG, which is considered as quite a conservative bank, has such a track record in the maybe Web3 space. And also, obviously, maybe now major banks in Japan should be, I think, exploring opportunities in the stable coins or maybe other Web3 businesses. So in case of MUFG, our bank invested in the Animoca brand maybe almost 4 years ago to explore maybe opportunities in the Web3 space. Yeah.
Wow. Even with Animoca, too.
Yeah.
Wow, very, very good. In terms of, thank you for that update in terms of what's happening in Japan, and we'll come back to it because there's so many new announcements that have been happening. It's very exciting.
Yeah.
Eugene, about Hong Kong, you were the first VATP licensed. Can you tell our audience a little bit about what's happening in Hong Kong and what are you doing in terms of the virtual asset space?
Sure, thanks, Angelina. So I think there's definitely a big shift in Hong Kong, especially in the last, I would say, 3-4 months. So Hong Kong officially came out these stablecoin legislations. Now it's officially accept the applications for a lot of different financial institutions, and then I heard it's quite overwhelming, right? And then the Hong Kong MA business like try to cool it down, and then for us it's like Yeah, it has been crazily busy because it seems like all the financial institutions, even a lot of big companies, now they suddenly like realize. I mean, in the crypto world, we use called FOMO, right? They kind of fear about losing out these opportunities, so everybody want to get into the game right now. And we are talking about not a small one, but we talk about really the top, the biggest. Let's say China-backed Hong Kong security firm in Hong Kong. So we have a lot of meeting with them, and also we have a meeting with the banks in Hong Kong. They're also interested about understand how the trading works and also how the stablecoin works, right? And also there's a lot of listco, right? They're interested to come to us and they talk about the potential to do the RWA, basically tokenize some underlying assets. I think one thing I want to particularly mention about the Hong Kong, right? Hong Kong regulator have been very proactive in terms of like pursuing the legislation in this blockchain crypto spaces. So they have a lot of license come out. They come out very more clear in terms of the regulatory framework. I think one particular thing worth to mention, Hong Kong has been emphasized like what they try to push is a digital asset. So they say, okay, it's a digital assets declaration 2.2. So the focus is going to be, so instead of a virtual asset. So basically the Hong Kong regulators say that we are not competing to try to get the exchange list more coin, more contract. Our focus is on the digital asset, which is stablecoin, tokenization, that kind of relate to the real assets.
I'll come back to Hong Kong in a little while because we'll talk about the workings with the government as well as the market, and hopefully we can talk a bit about that. Stephen, in terms of what are you seeing in terms of your clientele? You're basically based all over the world because your operations are everywhere. What are you seeing with the adoption of digital asset custody, your services? What are some of the trends that you're seeing in terms of institutional adoption? Is everybody lining up to open accounts?
Yeah, so I think we can probably speak a little bit more from like a technology provider lens, right? So I'd say 2 years ago, you were in this spaces where a lot of the use cases were around things like permission and private blockchains. Everything was being encapsulated within like a walled infrastructure, right? So there weren't many commercial use cases outside of like crypto native trading that were really commercially viable for the bank, right? Or for financial institutions as a whole. I think what you saw over the last year is this kind of movement towards things like stable coins and the adoption of a real commercial use case that could impact banks, right? And so I'd say globally, we're seeing more at least exploration around the idea of things like tokenized deposits, stable coins, and how that will really impact transactional banking within, at a global level, right? So you can be in the Middle East and you think about, oil and commodities. You can be in Latin America and you can think about supply chain and goods. You can be in the US and start to think about like all of those different things. And you can be in Southeast Asia and think about commodities trading and trade finance and all the implications for that for transaction banking. And so I think there's this basis right now, which is, okay, what are the use cases that are really going to impact our bottom line? And the first one being payments. And then I think there's a view around starting to look at blockchain as a technology and the impact of that, but then looking at crypto native assets as a new asset class that should be explored from a wealth management side, right? So you're seeing a lot of the brokerages underneath these large banks look at what it means in terms of outflows that they're seeing to places like Coinbase and Robinhood and Revolut and OSL and all of these different venues, and understanding the impact on their brokerage business from a wealth management perspective. So I'd say you'd see those two strata right now. I anticipate there will be more use cases that come up over time, but I'd say the bulk of the conversations we're seeing globally focus on those two things. And I think about tokenization of real-world assets as the next secondary step to that, right? Because before you can really bring efficiency from that, you have to bring money on-chain, right? And so you need a bigger movement of like tokenized deposits. You need a bigger movement of stablecoin proliferation at the bank in order to really support real-world asset tokenization, because it's not that efficient at the moment to be non-on-chain cash settled, right? So I think that will be the next step, but right where we are today is around payments and kind of like digital trading as a whole.
This is a time of real change where you're starting to get adoption. Is this a fad? And is this something that is going to launch into the next phases? We've talked about this before. And what are key success factors that you would recommend for banks, securities firms, or digital asset firms, or custodians? What would you recommend for people to think about as they embark on this journey of moving into Web3? And what are things that they really need to think about, especially from Japan's point of view, from Hong Kong's point of view, US and globally?
Maybe I'll start and then I'll pass it to everyone. I think like it's more than a fad, right? There are real commercial implications around like stable coins, right? I think that's the first thing that's ever probably scared a bank around blockchain technology and digital assets. I think, you know, generally speaking, they didn't look at like crypto trading as impactful on their wealth management business. So, you know, I think it wasn't really a key driver there. But I think like if you look at stable coins in this world that, you know, the world pays, the checkouts, the audience, the SAPs of the world are all thinking about how to integrate stablecoins to allow corporates to execute transactional banking on chain without the utilization of a bank. I think that's a really big deal for folks to be able to think about. It's the same way I would say like BlackRock launching their tokenized money market fund without going through a bank as a traditional issuer, but using securitized to break apart the value chain, showed asset managers how to like launch assets on chain without having to go through a bank for issuing and distribution. Those are fundamental shifts in the model, right?
Very
So,
much so.
I think for the first time when you're starting to see outflows change, this is a concern, right? And so if they're able, if the innovative space is able to solve these problems to create global trade and transactional money movement without the utilization of a bank, that's a real big impact. So I think it's more than a fad in that case, and it's probably the thing that's top of mind for everyone at the moment, at least when it comes to banking.
From our experience, especially talk to a lot of banks or financial institutions, I think right now it's definitely it's no longer about whether should I into this space, whether should I adopt the blockchain. Right? Nobody asks this question anymore. It's more about how to. So I think now a lot of banks think about, to be honest, like a lot of banks in Hong Kong, they actually is kind of new to this aspect. So they still consider like, oh, whether should we build ourselves or should we partner with some specialties like, you know, like Fireblocks, like OSL, right? And then they still try to understand, okay, who are my real client segment? I think they also still try to figure out. And also, I think one of the biggest important questions is actually how to integrate with the legacy system.
Exactly.
I think that's going to be key because I think the bank, there's no way they're going to say, okay, we no more our own system, no more COBOL, we just use everything blockchain. I think that's impossible. I think this is also very big pieces that like OSL, we've been trying to help them because we've been doing this compliance, exchanges, compliance, custodies, and then we actually work with a lot of financial institutions. We help them to bring the bridge, right? So that we kind of figure out with support our partner how we're able to efficiently connect the traditional broker system to the virtual assets custodians. I think this is something that we've been doing for the last 5-6 years. It's not easy, but I mean, for us, it's like this is like, you know, this is like not overnight happen, right? Because I think the OSL, they have been think about this long term. They know this day eventually going to come. The institution is going to come in. The financial institution is going to come in. That's one of the reasons why we want to be the first licensed exchange in Hong Kong, so that, you know, we can be ready when suddenly overnight the financial institution wake up and they say, I want to be part of it. I think the time just came.
I think you've both brought up very important issues, and I'd love for Suzuki-san to also talk about it, because all of the companies that have been around for at least the last few years or last 10 years have systems that may have been done on COBOL or all sorts of antiquated systems that need to be probably advanced. And I think this transition from traditional finance to Web3 is going to be very interesting. And those that can actually straddle both or use what was legacy and move it into the next century will be very, very important. And I think Japan now is in a process of really looking at itself. The FSA even has announced that they are going to completely reshuffle their operations. This is something very big that I've not seen a regulator say, that we're going to change the entire way that we regulate going forward. And that's a big announcement and a brave announcement. What's the thought processes with Japanese banks in terms of moving forward. And we were just in Osaka, and there were so many announcements made by SBI and different banks in terms of new digital asset exchanges and new cities and new things. So over to you, Suzuki-san.
Yeah, so I think a transition is not so easy, or more like a quite challenge for banks, because our system is quite legacy and not ready for maybe DeFi. It's a highly centralized, maybe old-fashioned, legacy system architecture. And in that sense, I think, we really need to work with maybe third party who can provide us, I think, maybe Web3 ready, maybe kind of maybe middle layer software type, infrastructure. And but also beyond that, also maybe we might have issue with, let's say, bridging between maybe on-chain and off-chain issue. Let's say banks need to maybe follow various regulation like anti-money laundering, KYC kind of things, and which were imposed by not only JFSA but also maybe US regulatory body too. And in that sense, but I think currently AML KYC is done on an off-chain basis, right? But if banks needed to deal with maybe Web3, so I think they of course would need to maybe deal with blockchain, which is of course on chain, and but also maybe you need to maybe connect or maybe you need to create a linkage between this on chain off chain data in maybe AML KYC matters. Because I think on chain it's basically blockchains are basically kind of anonymous, and there's no requirement for KYC or even AML, but we need to follow such a regulation, right? Yes. So we need to bridge such a on-chain, off-chain maybe issue too. Yeah. So that's a typical case. But I think maybe we can figure out maybe eventually through the partnership with various startups. Yeah.
Well, it's very exciting what's happening in Japan, and the success of today's WebEx conference and the number of people here that are very excited about this is amazing. So let's talk about governments. Here's our chance to ask our wish list. What can governments do better in terms of moving and helping the transition of organizations move into Web3? And I'll talk a little bit about what Hong Kong did, if you want me to start first, or I can, it's up to you guys. I'll just tell you what. In Hong Kong, what we've done is I'm one of the founders of a group called Web3 Harbor, and we actually sat down with government to actually come up with ways of how Hong Kong could actually be more Web3 friendly. And that's why the name of our charity is called Web3 Harbor, is to make Hong Kong a harbor for Web3. And we came up with something called a blueprint. So if you have a chance to take a look at it, it's on our website, BLU print, PRINT. And basically, it's a plan to work with Hong Kong government to be able to launch products, to be able to launch structures, to be able to work with and attract people to Hong Kong, to create an even more inclusive Web3 harbor that will actually expand in terms of functionality as well as optionality and interoperability. So it's the first time that Hong Kong government has worked with a group, and we hope that this will be a start that can help Japan and the United States and so on and so forth, that they see that governments and interested people are working together. What's happening in the US in terms of Mr. Trump with his stablecoin bill?
Yeah, I mean, I think it's, I guess if you ask me like what's important from a regulatory perspective, right? I think there's
Correct.
like a broader like clarity as far as like the requirements for, engaging in digital assets, right? So you have like DORA and MiCA in the EU, where you have obviously the Genius Act and like hopefully clarity in the US. There's kind of a range of like how folks should be thinking about it. And if you're a bank that's adopting like a new technology basis, like some level of harmonization on how you should be thinking about engaging in digital assets from a technology and from a risk and operational framework perspective is like really key, right? Because that's like the biggest question we get in terms of how do you think about AML and KYT? How do you think about like operational risk frameworks from a custodial and technology stack? How do you think about like the utilization of like on-chain assets, right? So like I think some clarity around that in the same way as you kind of look at broader like mobility of money basis would be key, right? I think like the other thing that's probably somewhat important is the whole benefit of something on blockchain is the fact that in some ways it's borderless, right? And so like asset distribution can be enhanced by the fact that like there's no kind of restrictions on where that asset can go. If you think about the way that banks traditionally operate, they're very much constrained by the geography in which they operate. So what makes an ICO really great is the fact that it's borderless. So you can get, you know, basically global distribution and like the utilization of like money or like funding on a global basis. What's the point of tokenizing a security if like the only place it can sit is in the local jurisdiction that it operates, right? There's not much of a benefit to doing that if it doesn't kind of sit in a borderless structure, right? So the fact of how do governments start to coordinate the fact that assets are moving on chain and those assets by virtue of being on chain are internally borderless, and there you have different hubs that then interact with how money and liquidity gets on chain and who can acquire those assets. I don't think people have thought like that far ahead, right? So you're seeing it kind of happen at a stablecoins level, which you see every regulator trying to adopt like a stablecoins legislation that is not harmonized, right? So some people can use it, some people can't. It's illegal here, it's not legal here. Like, you know, that kind of like kind of non-coordination is something that I think banks struggle with. So I think if I was going to ask something from the regulator, it'd be like, what are the key asset classes that we think are going to be impacted by blockchain, and how do those assets gain value, right? And how will they operate at a real exponential pace? And how do we coordinate across geos to ensure that like that can be the case, right? You know, that would be my wish list, I think.
And that is a really, really important point, what you brought out, because you've got the US where it's one set, hopefully, of rules that haven't quite all come out yet, but they will. But we don't have that in Asia. We have disparate countries working possibly in competition with each other. And this is the question that us as people that are being regulated are asking our regulators, hey, maybe Asia should start working together. Because in the US and in MiCA now, you just basically go there, get your license, and you can start operating. But in Asia, you have to come to Hong Kong to get a license, then you have to get one in Japan, then you have to get one in Thailand, one in Malaysia, and I'm sure there'll be more licenses, Singapore. And that's not a block. And we will be competing 7 licenses versus 1 in Europe and 1 in America. This is something that we hope maybe regulators will start talking about and we will be bringing up. Would this be something interesting for them to think about, I think?
So I think in case of Japan, you know, we have quite maybe advanced and sophisticated regulatory framework for Web3 for a long time through the, I think, amendment of, you know, Financial Instrument and Exchange Act or Payment Service Act, you know, and so let's say maybe when FTX collapsed in the States, also we had FTX Japan, and I think investors in FTX US lost all money. But regarding FTX investors, FTX Japan investors, actually their money was secured by the regulation, right? So we have such a maybe sophisticated advanced, you know, regulatory framework for a long time.
And Mt. Gox too.
Yeah, and also maybe our government has been encouraging maybe private sector to maybe implementing Web3 technologies. But issue here is now private sectors have a ball for a long time. But as I mentioned about maybe I think recent maybe I think you know, announcement by JPYC, you know, regarding the issuance of you know, Japanese first stable coin. I think it took a long time for private sector to actually take specific actions over, you know, so that's a big issue in Japan. So still maybe banks and also I think businesses are maybe kind of wait and see status. But also, you know, I can say that maybe I think black ship is coming from the US. You know, Kurofune black ship is maybe came to Japan, you know, at maybe Shogun era, and which maybe linked to I think you know, revolution in Japan. So same thing is happening right now. So that's my idea. But now Genius Act was passed in the States. And also major US banks or major US tech companies are maybe preferring for launch their own stable coins, which should have some kind of ripple effect to maybe Japanese market. So now we need to do something, especially in a B2B space. I think maybe there are two typical applications, like a B2B, B2C, but I think maybe initially we will see a major impact in the B2B space, especially maybe large enterprises who need to deal with maybe various currencies with maybe various jurisdiction. So companies like Toyota, Sony, or such companies, they have operation in maybe I think countries. And they need to maybe manage, I think, different currencies and the monies. And so I think banks provide, what we call maybe global cash management system for such large enterprises. But it's so inefficient and out of date, and also very cost maybe expensive. But by I think implementing a stablecoin solution and also maybe smart contract solution, potentially maybe enterprise can maybe take advantage of maybe more efficient, less expense, maybe way of maybe dealing with this treasury issue. So I think maybe banks like MUFG need to prepare for such a maybe big trend, kind of a black sheep from the US. That's my idea. Yeah.
Thank you for that.
Can I just jump on this point, just the issue you mentioned? So I just want to share from our perspective for what we're doing today. So first, we definitely recognize this issue, right? And then the blockchain itself is actually global accessible by nature, right? So what we are doing is actually we will try to get the license in a different jurisdiction, right? So we have a first license in Hong Kong, and also we have license in Japan, Australia. We recently tried to acquire this payment company called Banser. They have a license in 40 countries. So what we try to do is like we definitely believe blockchain is going to be the future core financial infrastructure. But then you still have to, back to your previous point, like different jurisdictions, they have different compliance, different law, different legal. So that's why we get a license. We try to localize the compliance so we're still able to operate with the global standard. So that will allow our client, they're able to, they don't have to worry about too much about the local compliance. So I think that's the final goal, what we try to do today from the OSL as a global infrastructure providers.
One of the big differences in moving to Web3 is the issue of security. And after this Bybit hack, and then the hacks that we don't even know about, what are your thoughts in terms of, does traditional finance that is moving into this new space, do they really understand the security risks, and do they really understand what they're actually going into? And what advice would you give to them? And I have to say, Fireblocks is one of the most amazing and secure systems that I know. And I mean, would you like to start in terms of what advice would you give traditional finance that's moving into Web3 in terms of security, in terms of protecting your data?
Yeah, I mean, maybe I'll say something, and it doesn't just apply to banks, but at the end of the day, like it's complex to like think about all the security and attack vectors that like are happening in digital assets, like in terms of, as a technology provider, the amount of money we spend on creating like OPSEC teams and engineering and product and all those different things, right? I always like use an example that if I gave you $100 million worth of gold bars, like how much money would you spend securing that $100 million? 1% of the value of that asset? And people always say like, okay, when you think about digital asset, like how much are people willing to pay for security, right? I think that's like always a pretty fundamental gap, right? Because it's much easier to steal $100 million worth of digital assets than it is to steal $100 million of gold bars, right? But in terms of like the risk basis, like I think people haven't caught up to the fact that at the end of the day, that's the big implication. Now, I think surprisingly, or not surprisingly, banks think about security in a pretty significant way, right? You have brand reputation, you have all of those different things. Like I think when a hack happens on a decentralized exchange or it happens within the ecosystem, people kind of wash it in terms of, well, that's crypto, right? It sucks, but it's still crypto. If all of a sudden BNY Mellon or someone had a hack, that would be a very significant detriment on their brand reputation.
Yep.
And so like we see there's just a fundamental difference in the level of spend that banks have when it comes to security around digital assets, right? We're generally not negotiating on like, whether or not we should store or someone should pay us $35K for $500 million of AUC, right? That's not the kind of conversations we're having. In general, it's like, what are the different risk frameworks? How should they think about operational risk? How should they think about like even, for example, auditing us as a technology provider? So I think they're very much well aware, and no one at a bank wants to be the first person to adopt digital assets and have like that kind of negative thing happen. You've been at a bank for 20 years, you want to retire, right? Like I don't think that you want to be responsible for the fact that there was a significant hack. So I think they think about that risk framework. I probably would argue that's why you saw so much around like private blockchains and permission blockchains, because like the recourse basis was a lot different, right? If something happened, you could roll back a set of transactions. You could do other things. It was encapsulated within your ecosystem. If that happens on public blockchain, in terms of you custody Bitcoin or stable coins, there are huge implications there. So, I think they are taking it very seriously. And, they're considered kind of like hubs within like the entire financial ecosystem. So I think in general, they're thinking about that the right way.
Oh, thank you for that. In terms of, Eugene, what do you think in terms of, from a security point of view for the exchange? They love attacking exchanges. From security, what would you think in terms of giving advice?
So from the OSL perspective, we are licensed exchanges, and of course, the regulator already like set up very high standard in order to get the custodian license. And also, it's required that we have an insurance coverage, so that basically the client assets can get in this high percentage protections. Just from my perspective as industry practitioners, so I kind of feel like I think now like a lot of financial institutions have to find a balance between the time to market. It's also what become very important, and also the securities. So we always also think about that. We don't have to build everything all on ourselves. We can rely some specialists, right? So that's why Stephen bought me dinner last night, because I'm actually their client for some jurisdictions. Yeah, and of course there's certain part that you definitely have to control, but because we actually not competitor, right? Because they actually technology provider, and we are basically we're licensed entity. So we definitely sometimes really value like their experience, their knowledge in the past for so many years being in that particular aspect, and this aspect actually evolving very fast, right? We talk about multi-chain, right? We talk about staking. There's a lot of things that's going on, right? So sometimes I think like you really try to find a good partner, trust partner, and then I think that's probably will be the best solution instead of like you just try to figure out everything by yourself.
We're in our last 2 minutes, and so I'm going to change the question a little bit. It's a changing world now, and it's 2025. Where do you see this all going by 2030? And what's your forecast, and what would you forecast, or what advice would you give, or whatever you'd like to, your last thoughts in terms of to the audience?
Yeah, so I think in Japan,
yeah, please.
So in Japan, I think maybe, as I mentioned, banks like MUFG have a track record of maybe doing POC or maybe launching various initiatives in the Web3 space. And so I believe that maybe in the next 5 years, I think maybe we are seeing real commercial maybe application with blockchain technology. So that's number one. But also, I think essentially maybe DeFi, what decentralized finance is, it's basically totally different from our world, which is highly centralized by government and also central banks. And so also banks need to find a kind of middle ground between maybe DeFi and also TradFi. So in next 5 years, I think we still maybe exploring maybe to maybe I think identify this middle ground. So that's my idea. But also maybe these are not from banks, but these are more like from startups or tech companies, and so we see a lot of maybe changes maybe associated with the stable coins. Or maybe security tokens or any type of blockchain application happen soon in Japan. So that's my guess. Yeah.
Thank you.
So yeah, short of time, so I make my comment pretty quick. So we definitely like super excited about the next 5-10 years because we do believe like today the everything is shift. I mean. I have to say thanks to Donald Trump, right? He started a whole U.S. regulation to make this blockchain technology as a more recognizable ever from the institution, from the government perspective, right? I think back to your previous point, I think it's not only about Web3, not about crypto, it's about potentially about the future of country, right? Whether you can stay in the game, whether you can change your core financial infrastructure when you can increase your productivities. Otherwise, you probably could potentially you can be beat up by other countries that pick this up faster than you're able to. So I think we definitely think that the financial institution will be very, very different in 5 years' time from now.
Very different. And you get the last word, Stephen.
Yeah, I guess in the 5-year view, I would say the hope is that banks or financial institutions start to look at themselves as technology company, as not just legacy financial institutions. So I think today, in general, you see folks feel very comfortable around like financial regulation that creates a moat for their services. But we're seeing disruption happen like at every level, right? And so I hope that within the next 5 years, banks start to say, look, we're probably closer to or should be closer to a technology company that's adopting like various different technology bases to provide better services and increase like commercialization of opportunities. If that's the case, then I think it'll be a very interesting basis between like the incumbents and the innovators, right? And that's pretty exciting.
And I will leave you all with one word. Constant is the only, the word change is going to be the only constant going forward. So we are all in it for the ride, and we're going to have fun. So enjoy the rest of your day. I'd like to give a round of applause to our amazing panel. Thank you very much. Thank you all.
Minasama, arigatou gozaimashita. Thank you very much to Mr. Suzuki, Mr. Cheung, Mr. Richardson, and to our moderator, Ms. Angelina Kwan. それではこれより写真撮影を行います。Okay, we'll have a group photo, so anyone, please feel free to grab your phones and cameras and get some photos in. Okay, please take a look at where all the people are standing with their phones. There we go, right over there. Hi, よろしいでしょうか。ありがとうございました。では皆様、本日のパネリスト、そしてモデレーターにもう一度大きな拍手をお願いいたします。Thank you very much, everyone. Please exit the stage. Thank you.